Hello guys, this is fairbinaryoptions.com. I'm looking at the US dollar and the Japanese yen, and I'm seeing, or I'm looking at a currency pair that is as bullish can be, in the sense that from my point of view it is ready to go and take the highs. And I'm not talking about these highs, but I'm talking about these highs, and this is the 1 hour chart. So whenever you're looking at markets and you're trying to interpret the 1 hour chart like it is here, try not to think too much in terms of the actual waves involved or the analysis that should be let's say behind the screen. But when you trade binary options, only one single pip price to be higher than your striking price if you're buying call options, or lower than your striking price if you're buying put options, and that should be enough for the option to be declared, if you want, profitable, and for the trader to make a profit. I would say that what is happening here on the US dollar Japanese yen is a classical rising trend that's only at the beginning from my point of view. All the dips are being long. The very definition of a rising trend is being made out of a higher low and then a higher low and then a higher low and then a higher low. Now we had the retail sales today in the United States, and the actual outcome has been negative. Why do I say negative? Well, because it was a release lower than expectations, and everybody jumped on buying the US dollar, buying the Japanese yen, so selling the US dollar. But it was followed by revisions for the previous months, so actually the outcome was quite bullish on the pair, and the pair here being the US dollar and the Japanese yen. I would say that on the bigger degree, I would say that what happened here on the 1 hour chart here at the downside is a classical contracting triangle here. So this to be A, B, C, D, E, and the actual wave ended here. So this would be something like this from here to here. And then from here to here. So A, B, C, D, like this. So A, B, C, D, E, most likely, in order to incorporate the triangle as well. And just like that, I would say that our E wave, or the, let's say, the end of the whole move that started from this moment of time on the right side, would be here at around 101.80, so something like A, B, C, D, and then the E wave to be here like this. So this would be our actual low. Now if you make it a bit bigger like this, and from this moment on we should start the count, if you want, or we should start the to address the move to the upside. And I would say that the move to the upside looks bullish as well, as we are looking at a possible first wave to be this one here, and then to look at the second wave. But the second wave, as you very well see here, I don't think that this is the second wave. The second wave most likely will be formed out of this complex correction. Now this complex correction, in my book, it is being called a, and mark my words, it is being called a running flat. Now running flat, it is being formed out of a B, C here to the downside. So the first flat, let's try to take a look at the retracement for the B wave there. Now if we have the first wave that is done here, and we take the Fibonacci retracement from here to here, we are seeing the 61.8 being reached, so yes, definitely this is a flat. So I would say that the move to the downside here goes with ABC, the first flat, then the X wave, then the second flat, and just like that, this being called a running flat. The key to a running flat is this move here, or this high, if you want, not to be pierced by any parts of the move that is following. Actually, it is not even a running flat, in the sense that this to be an A and a B and a C, one possibility for the C wave to be 1, 2, 3, 4, 5, or it might even be a double running flat, A, B, C, X, and then A, B, C. I would say that the first scenario would be most likely, and in this case, this should be labeled as the second wave. Well, if this is the second wave, what to do with the move that follows? Well, I would say that most likely from this moment of time we are looking for an extended wave, but the extension should come like this from this moment of time till here and till this end here. And the minimum to go would be 161.8. Now if you take a trend line here and you look for the 161 point, that would be 102.55. We are now at 102.26, so quite a long way to go for, let's say, a day in which the US dollar Japanese yen didn't really move. I would say that the bulls are in control. I would say that bears, they don't even know what's coming, and therefore will keep my bias here on the long side, on the call options for the US dollar and the Japanese yen. So let's write on the screen here that buying call options with end of week, so by this Friday expiration date. Why end of week? It is only the beginning of an impulsive move. So being only the beginning of an impulsive move, we have all the chances in the world for the move to actually expire well in the money on Friday. So buying call options with end of week expiration date. This is our recommendation here on the US dollar Japanese yen. I would say that a third wave is about to come. Minimum, again, minimum 161.8. We don't know, maybe it's going to be a third wave extension, maybe it's going to be a fifth wave extension, but what we do know is that higher values are about to come. Thank you very much for being here. This is fairbinaryoptions.com, and all this analysis and recommendations are possible due to the help of our sponsor here, Lionite. Bye bye.